So here, I want to spend these few minutes with you to get you to understand tax structures. So in US, these are regular structures, regular citizens. You know, if you're not Elon Musk and you're not Donald Trump, and you probably just need to know these ones, okay? And these are the majority successful small business owners would use. So number one is sole proprietorship. Number two is limited liability, partnership or company. S Corp, C Corp, then what? Not for profit organizations. So these are structures that people are using. And, you know, and another way to kind of articulate what means structure. Structure also means that you are choosing your house, like you want to get married, so you want to start a business. Use that analogy, okay? Making a decision, getting married, and it depends on how two of you are thinking about family. You may be buying a single home, you may be buying a condo, you may be buying a semi-detached, and you may be buying an apartment complex, and you're going to be renting everything out, and you may be buying a house with a detached garage, right? So these are different choices of homes. So in business, when you form a business, you are literally choosing that style. You're choosing what your home looks like. So as a sole proprietorship, I want to say that sole proprietorship is a best way for you to test the water and to know that, okay, I want to do business. And the reason I say that is when you are sole proprietor, you don't need to go to the lawyer to form any structures, and you just use your name, use your social security number, and you start a business. And we have a successful business owner who were sole proprietor. Okay, what they do is they make prosciutto meat at home in the basement, and they are making it for themselves in the very beginning, and slowly the friends want it, relative wants it, and neighbors want it. So they start selling it. As a sole proprietor, they just make it seasonally and they're selling it to the neighbors, and things are going. And with that realization, then later on a company was formed, because, you know, as a sole proprietor, that's only how much you can do. If you made money, if you made more than $25,000 net profit, that is my threshold for you. If you start a sole proprietorship and you are making more than $25,000 in net profit, you need to become a company. And this is where the tax become heavier, unnecessarily high, and you are paying both income tax and self-employment tax, and you are growing, but your tax structure is not fitting. And it's almost like you have 9 children in the family, but you want to rent an apartment. No. So you need a company. So your structure needs to change. So that is the threshold for sole proprietorship, and you start. There's a benefit to it, and when you make money, you need to move on. So in relation to LLC and LLP, these are partnership, right? And if you just have an LLC under your personal name and you are defaulted back to sole proprietor, one thing you gain by making a single member LLC, you are just gaining that legal protection the lawyer was talking about. But in tax world, you are acting like a sole proprietor. You're paying sole proprietor taxes. You are no different than anyone who is sole proprietor, other than your company has an LLC behind it, and that's more of a business risk than the legal side of things the attorney was talking about. So LLC, LLP really is a partnership. When you have this partnership, what do you do? And the partnership in here, that's where the complexity comes. So some partners are working partner, some partners are just investing. So the tax treatment to the working partners are exactly the same as a sole proprietorship. So from tax standpoint, that doesn't save you, okay? And if you are looking at making more than $25,000 on net profit, and you are a LLC, you are active partner to it, you're paying the same high taxes like we were trying to not to pay. So if you do have more than $25,000 profit, and your choice is going to S corporation, C corporation, and to start a corporation. All right. So now you see how the money drives what you can become. That doesn't mean that every time you make more money, you have to go to your lawyers and redo your company. No, no, no. There is a process called election. It's not the election is not like the real election we experience, and the fraud and not fraud, fake and not fake. This election is simple and straightforward. We just do it with IRS, and you elect it. And if it is an election to the future years, IRS automatically approve that. Okay. But if you elect backwards, like right now we're in 2022, already in the month of September, and you are like, oh, after I hear you, I'm going to do election, and I want to elect back to January the 1st, 2022. If you do that, it is doable. Good news. IRS allow you to do that, but there is a provision you need to reference in order IRS to do that for you, okay? So you can file election to make yourself change from LLC to S Corp, and change from LLC to C Corp, or change from C Corp to S Corp, or S Corp revoke the status, become C Corp. All of these things I was talking about, you don't need to change your EIN number, you don't need to change your ownership, and you can just do it the way I described. It is literally a piece of paper, and you file election.